Good afternoon. My name is Kade Jaarsma, and today I'm going to be giving a presentation on Singapore's commercial banking and wealth management sectors. And so in this consultant's report, I'm going to be giving you a little bit of an overview of the industry that we're going to be studying. And then I'm going to dive into each of Porter's five forces and analyze the threats and the rivalries within this industry. And then I'm going to jump to some strategic implementations and recommendations that I have for a firm in these markets. And then I'm going to conclude today's presentation. And so to begin, and we have the objective of this consultant's report is to evaluate the competitive landscape of Singapore's wealth management and commercial banking industry using Porter's framework. And so using this framework, I'm going to apply it to the commercial banking and wealth management sectors and the broader financial industry in Singapore. And some key insights that I've found that I'm going to be going over in depth later is that the market is shifting from an oligopoly to a competitive environment. So historically in Singapore, there have been three large banks that have controlled the vast majority of both wealth management and commercial banking for citizens of Singapore. And so we're going to analyze how that market has shifted from an oligopoly into a competitive market with the advent of substitutes in the market as well as major players coming into Singapore. Then another key insight is that firms must pursue product differentiation and recruit top talent to increase their market share. And so because this industry has kind of morphed from an oligopoly into a competitive market, all these firms are becoming price takers in the market. And so because these firms are price takers, price wars, they don't work. Price wars are just a war to the bottom. They're going to slash profit margins. And so the key for all firms in these spaces are to pursue product differentiation. What makes their product special at a similar cost to their competitors? And then one way to do that I'm going to dive into is top talent recruitment. And so we're going to explore the advice that I would give to a firm in this industry in regards to recruiting top talent as one of their forms of product differentiation. And then finally, the last key insight in this report is a growing demand to increase cross-border estate planning and tax management capabilities. So Singapore is a hub for international wealth, and as such, there's a huge demand for management capabilities of estates beyond just the Singapore border. And so this is another way that a product can be differentiated from their competitors. And so to just give a brief industry overview, so the macroeconomic context of Singapore is a very vibrant, healthy economy. And so this economy has experienced strong GDP growth for the last decades. They have a very strong rule of law, and they have political neutrality. And so all of these things, the entrance into the growth market, the safety of Singapore, makes Singapore an incredibly attractive wealth haven for Singapore citizens, but also the world in general, and especially people from China, other parts of Southeast Asia. And so to build on this, Singapore is a global middleman. And so Singapore, both geographically and politically, is in an ideal spot to reap the rewards of both Western influence and proximity to Chinese manufacturing, Chinese wealth, Chinese influence. And so Singapore has positioned itself to attract wealth from both sides of this new divide in the world between China and the West. And one way that Singapore does this is through investment incentivization due to no capital gains tax. So Singapore, Singapore, in addition to having these incredible this safety and this strong GDP growth and a vibrant economy, they also incentivize wealth being stored in their country due to there being no capital gains tax. And so all these factors are a reason why Singapore has grown into a huge wealth hub. And so some key commercial banking and wealth management segments in Singapore are the local incumbents. And so I've mentioned these three large banks, but the DBS, the Developmental Bank of Singapore, the OCBC, the Overseas Chinese Banking Corporation, and the UOB, the United Overseas Bank, have been major players in Singapore's commercial banking and wealth management industries for decades. And these firms, like I mentioned earlier, they used to have an oligopoly. However, there are now global investment firms like JP Morgan, HSBC, Goldman Sachs that are moving into the area and targeting high net worth clients because there is such a level of wealth in Singapore. And in addition to these global investment firms moving in, we're also seeing different substitutes in the market. So in addition to the digital banking that many Singaporean citizens utilize, there are lots of regional firms and family offices in Singapore. And these are targeted at individuals in the wealth management space with lower net worths than these investment firms attract, like the major American and European firms. And so to begin with the analysis using Porter's 5 forces, the competitive rivalry in Singapore's banking and wealth management space is high. It's very high. And as previously reviewed, there are local incumbents with a large degree of market share. However, with the emergence of the Southeast Asian growth market and the benefits of the industry as previously mentioned, these large international investment banks have moved into the area, moving the options or increasing the options, for high net worth individuals. And so these high net worth individuals, they have the option to invest with local incumbent banks or to choose from a multitude of these European and American firms or Chinese firms, as we saw on our visit with Noah Holdings. And so there are these firms, these multinational corporations that are moving into Singapore targeting high net worth individuals. And so there's a great amount of firms and a competitive rivalry competing for the high net worth clients in Singapore. And so what we've seen is that margins are tightening and digital differentiation is critical. So due to this competitive rivalry competing for high net worth clients in the commercial banking and wealth management spaces, you need to set each firm in this industry, they have to set themselves apart somehow. And so as a pricing strategy, price wars are no good. As I previously mentioned, you are a price taker in this competitive market. However, these firms have the option to differentiate their product. And so this can look like having a more personal touch, having improved client-facing infrastructure, as I'll talk about more later, or maybe having some slightly different fee schemes for some different levels of clients. And in this industry, the threat of new entrants is a moderate risk. And it's a moderate risk, not because it's not attractive for all firms to try to join the Singapore market, but there's lots of regulatory hurdles. So the Monetary Authority of Singapore maintains high standards, including the amount of capital that prospective banks need to have, as well as sufficient liquidity. However, this Monetary Authority of Singapore is very privy to allowing digital players and players with lots of innovation into their space. And so there is a threat of new entrants that's fairly low for major banks coming in because of the capital requirements. However, there is a moderate to high threat of new entrants in the digital and different spaces than traditional investment banking. And so, yeah, this is not to say that Singapore is not a highly attractive area for wealth, and as such, for all firms want a bit of a piece of the pie of this Singapore market. However, the threat of new entrants is only moderate due to the high capital requirements that are required by law to enter this market. And so the implication is that barriers, they are falling due to the government's willingness to allow digital banks into the industry. However, scale and trust still matter. All right. Moving on to the bargaining power of buyers. And the bargaining power of buyers is moderate to high. So clients, especially high net worth clients, are informed, savvy, and rate sensitive. And so with the onset of more firms into the market, these high net worth consumers, they have the option to say, I like this firm's differentiated fee structure better than yours, to try to force concessions, as an example. And in addition, the switching costs are very low of switching from one firm to another. And so with digital platforms and financial comparison tools, firms do not have durable competitive advantages. And so because firms, they really don't have much to stop some of their clients from up and moving to their competitor, these buyers, these consumers, they have a lot of bargaining power with these companies to try to keep their business. In addition, these high net worth clients, they have a high degree of offshore wealth options. There's nothing stopping these clients from moving to Zurich or moving to a different offshore wealth space to manage their wealth. And so all these factors make the bargaining powers of Singaporean buyers very high. And now the bargaining power of suppliers. So suppliers in the Singapore wealth management and commercial banking industry, um, there's not just one supplier, there's many. So cloud and AI services, they provide their services to these major players in Singapore. And so these cloud and AI services, they have high bargaining power. Services like AWS are only one of a few suppliers worldwide that can support the level of care that's needed for these firms. And as such, they have a large degree of bargaining power. Likewise, there's a large degree of bargaining power for human talent, top human talent, due to small levels of competent workforce in artificial intelligence, data analysis, and financial professionals. And while these have very large bargaining power, the Monetary Authority of Singapore that regulates the industry has the highest amount of power for suppliers. And they're not a strict supplier in the sense of they're giving a service to these firms, but they are the ones regulating the industry, and as such, they have a huge degree of influence on this industry. And so the threat of substitutes is also very high for firms in Singapore's financial management space. So there are non-bank finance opportunities through personal loans and things of that nature. There are high amounts of digital banking, like many low to middle or even high net worth citizens use. They just manage their own wealth online. And like I mentioned before, there's lots of offshore options in addition to wealth alternatives like real estate and physical gold. So these banks, they have to make their products so differentiated and so attractive to consumers because there are so many threats to substitutes. And so all of this is to say, I have a few strategic implementations and recommendations for a firm in Singapore's financial market. So one practical way that firms can improve their product is to make client-facing infrastructure as easy to use as possible. So whether these are their websites or their customer service or their AI chatbots online, in a sea of great firms, improving customer service and this customer-facing infrastructure can change the quality of their product. Improving client-facing infrastructure, customer service, and a lack of regulation for these international players are all ways of making a specific firm more attractive despite similar quality of product otherwise. In addition, another practical recommendation I would have for these firms is to be super intentional about attracting the top talent that's available in the market. So top talent is in high demand with data analysts, with CFAs, with AI techs. And so creating an improved work task force by attracting top talent by offering competitive salary, job rotation, flexible hours will attract top talent. And when firms attract this top worldwide talent, then this will increase the speed of new promotions and advances, leading to firms to have first mover advantages in the industry. And so in the wealth management business, top talent with a long track record of success is going to attract wealthy foreign nationals looking for a safe place to grow their wealth. And so in conclusion, Singapore's financial industry remains robust, but is under very competitive pressure using Porter's analysis. There's increasing competition between local incumbents DBS, OCBC, and UOB, with both global investment banks and personal small businesses in the wealth management space. And as a consultant to a firm in this industry, I would recommend pursuing differentiated product through attracting top talent, as well as improving client-facing infrastructure and tax management capabilities for wealthy offshore clients. And so these are just practical ways that a firm can differentiate their product and increase their market share in a industry that is moving from a completely oligopoly to a more perfectly competitive industry. And so I hope this was useful. I hope this was a helpful rundown of Singapore's wealth management and commercial banking industry. And I hope that these tips can help any firm listening to increase their market share and differentiate their product. Thanks.